Let's talk to Clem Chambers. He's the founder of ADVFN. Very good morning to you, young Clem.
Morning, Nick.
Right, what's going on? What are you thinking? Markets quite steady?
Well, I mean, I think it's quite good. And when you think about the potential for trouble in Turkey,
Yeah.
I mean, that really could cause problems. I mean, there's 100 to 200 billion dollars worth of debt with the European banks, or something, you know, a noticeable figure. But I don't think these days the regulators stroke central banks, one of the same thing really, I suppose, are going to get caught on the hop with this. So, you know, if there was any whiff of trouble with European banking, they would just come in and do a bit of QE and, you know, do a bit of support, and that would be that. But nonetheless, it's an interesting situation going on there.
Okay. In terms of the S&P 500, companies have reported now, very good set of numbers. Do you think maybe onward and upward for the rest of the year?
I mean, it's always high risk to predict these things, but I mean, the charts look very strong. And, you know, I've just got a feeling, there's a possibility we're going to go into a bubble phase, you know, the final run.
Yeah.
And I mean, the Fed, I believe, is trying to stop that, and is basically will, you know, every time the market goes particularly strong, it will just chop it down by getting its own balance sheet in order. So perhaps not, but all the technicals are suggestive of that final vertical. So really, it's between bubble bust and the Fed flattening out that you know, that move into a sideways trade. So I think it's you have to be a little bit positioned for a bubble, and you have to be a reasonably large amount of positioning for, you know, selling any at top of that channel that we're in, and then buying back when it falls back again. I mean, we could be in that fallback zone right now. I mean, the markets have been weak for a few days, and you know, it appears that we're in a little bit of a very short-term bear. Hopefully it's short term. So we could be in that sideways channel that I've been talking about for a couple of months now. And I think that's where it's going to be. We're going to be in that channel. If the market tries to do its you know, final run bubble, it will be chopped down by the Fed, who wants to get its balance sheet down, but won't do it at the cost of the market. So you'll get that set of sideways V shapes for a couple of years, perhaps. Like after 2000, if you look at the Dow, it was sideways trading plus a little bit of a crash for quite some time. And I think that's the market we're in to further notice.
Understood. Right, let's talk about your favourite subject. I assume it's still your favourite subject, Bitcoin. Any developments in the last week?
Well, it's been very soft, but the fascinating thing to me is the market goes vertical either way when markets in different countries open and close. I mean, for example, this morning it was up a few $100 a Bitcoin, pretty much exactly at open. So there's something going on there. I believe probably the big banks are now starting to, you know, arbit against other correlated, non-correlated assets. So, you know, now that the banks are in, it's going to be a very polluted market. So that's interesting in its own right. But I still think it will bottom out at some point in a not too distant future, and then we'll go on another run, because it's, you know, there's only 17 million of these things out there in terms of Bitcoin. And so I think, you know, once the circulation continues to increase, i.e. usages for it,
yep,
the actual coins themselves going round and round and round, the more of that goes on, the higher the price is going to be.
Okay, and finally, any final thoughts?
Well, I think, you know, halfway through August, getting towards halfway through September, when the St. Ledger is coming. So I'm quite interested to see what happens this autumn. I keep flip-flopping from bullish to bearish, as in the same, probably with a little bit of a lag from the market. But, you know, I think the autumn is going to be very interesting. There's so much bad news already in the market, and yet the market is so strong. It leaves you wondering, you know, what exactly is supporting the market. And I think really it's a momentum thing, because everybody's had this bull market for, well, in America at least, since 2009,
yeah,
and they've become accustomed to everything always going up, you know, buying the dip. And the other thing that fascinates me is the UK market is so terribly low. I mean, you could put that down to the UK economy and the UK situation being pretty rough and dire as opposed to other places, but it's pretty hard to really justify the low valuations of the market as a whole in the UK. And then you look at France, it's the same situation. And then you look at America, which is obviously the counterexample, which has been so strong. And then you look at Germany, and it's the same. So you have this split between France and UK being the dwarfs of the financial worlds in the West, and America and Germany being the titans. Will that go on forever? Surely it can't go on forever. At some point, I think, well, at least as a pairs trade, if you're brave enough to short America and long the UK, that is going to pan out. Personally, I think if you're going to be long any market, always be long the one which is in the value territory, which is the UK and France at the moment. Margins of error and all that. So I think that's quite interesting because, if the UK was to catch up with the US over a period of 2 or 3 years, that'd be a huge, huge performance.
Yeah.
It won't, but, the potential is there.
Right. On that note, we ran out of time. Clem, as always, thought-provoking. Thank you very much indeed.
Cheers, Nick. Thank you.